want to, yeah, it'd be great.
All right. Um, so do you want to go over some of the basics to a strangle and how it works and how you profit from it?
Yeah, go ahead.
Okay.
I mean,
What
are you doing a call and a put on each side of the strike?
exactly? Yeah, you're
Yeah,
essentially doing both sides. Do you
you're just
use
buying.
Thinkorswim or Tastyworks?
Yeah, I'm using Schwab.
Schwab. Okay, you have to double check if you're approved to trade the strangles though, because I know another member that isn't approved for it. They can only sell the put side. They are not able to sell the call side. So you want to double check
So,
on
so
that.
you're selling or you're buying? You're selling?
We're selling them, yes.
Oh, okay, all right. I guess I was thinking we were buying.
Yeah, because it is a naked call, so technically there's an unlimited loss. Schwab may or may not let you do those.
I'm approved on my brokerage account for calls for selling puts. So I am
Right.
approved on that. I've done that before.
Okay, so you could test that out at one point and see if it lets you or not. But the trade that I did yesterday, it was 45 days out. Again, this is on the Lance's Trades channel on the inner circle. So we did 45 days out. It's now 44 days. We did the 33.50, sold that put, and then the 44.50 sold that call. Okay. Schwab and Thinkorswim are going to look pretty similar, I think, to this. 33.50. And was it 44, I think? 44.50. Yeah, so we're essentially playing both directions. And you do get a little bit more premium for that than if you
So
didn't.
what is the MEH or MESH3? What is that?
All right, so if you look at the MES contract, those are essentially the letter after MES has to do with the expiration date. So right now we're in the Z contract, and all the futures have these letters that go with them. It's going to expire in 9 days, but then after 9 days, it changes to the H, and H goes another about 110, 120 days, I think it is. So when you're doing this, you want to make sure you're in the appropriate expiration. That's a good question, actually. Like if I sold the 9 days out for the MESZ and it happens to go against you, it would be cash settled and you would have to actually put up the difference of the loss there. So I usually don't want to trade them if they're expiring that, exactly 9 days out. Because here it says 9 days is a Z, 16 days is the H, right? So I tend to stay away from those 9 days here. I'd rather just stay in the next expiration cycle if I was going that far out.
So what is the ES then? What is that? Is that something related to SPY? Is that
Yes.
how's that?
So
Okay.
the ES is the micro
ASPX.
futures for, sorry, E-mini futures for SPX. So it's very similar to XPX. It moves essentially the same way that it does. And it is a leverage product because they're futures. However, what we're trying to do is use really low deltas in the calls and puts to take advantage of the span margin that it gives you. And we don't want to be overbearing and overloading on these. So that's why anytime I do a trade, I usually say the amount of buying power you want to have to do it. This one I actually didn't, so let me add to it. So the one from
Now,
yesterday,
let me ask you a question. Why wouldn't you put a long, like an iron condor? Why wouldn't you do that to basically keep some of your cash freed up, instead of a naked put
good
or call?
question. Yeah, let me show you what it looks like with the, because I actually did try that a bit about 6 months ago. Let's say a 50 wide iron condor with the very same strikes, 44.50, and I'm going 50 further away, so 4,500. It's only going to pay you 2.4, and that's for MES. So you're literally getting about 12 bucks. Not really worth it. You could do it on ES, it'll kill you a little more, but then another issue is the commissions could start to add up pretty easily. I would say
I think what I'm
if you are
Go
gonna
ahead.
do it, I would keep them at least 50 wide, maybe even 100 wide. just so the commissions don't really eat up a lot of the amount.
What is the commission? I mean, I'm paying right now on Schwab. Now this is for options. I'm paying 65 cents a contract.
Right. And I am too. I have a Roth IRA and Schwab. I don't know what the futures are for Schwab. It's gonna be more than that. But Thinkorswim, it's about $2.25 per leg per entering and closing. So it is
Now,
more in commissions.
is this the same as options where it's 100, or is it just how's that work?
One contract is essentially like doing 100 shares when you're doing an option. So
Just like
yeah, it's a pretty common question. If you get assigned on a option futures contract, you won't get 100 shares of the stock. You won't get 100 contracts of the stock or of the future, which a lot of people think happen. You get one contract. So it's really one to one. You don't have to worry about the 100 stuff for futures. And that's a good question because a lot of people freak out. They think if I get assigned on a short put and a futures contract, I have 100 contracts. That would be a really dramatic loss, and that doesn't happen. But if you look here, this is for Thinkorswim. If I do a 50 watt, any type of width iron condor on ES, we're looking at $9 in commission, 224 in fees. We're at what 1124, and that's just to open it. To close it is the same thing again. So you're looking at 20 something dollars in commissions. It's a lot of money. So definitely consider that. I would make the widths longer, like 100, maybe 200 width. So then at least like it won't be as much of a percent of the gain because you'll be taking in more.
now, what's the advantage to futures over options? What got you into that?
All right, so let me start over with say MES. Let's do SPY first. So SPY, let's say I wanted to do about a 30-day out, 0.1 delta put, just to keep it simple. About 358 strike price. I could take in $137, but I'm gonna use up a lot of buying power. It's gonna be 358 times 100, right? $35,000 in order to sell one contract to
Right.
only make 130 bucks. If you look at the percent that you would make on that, 137 divided by about $36,000, you're not even getting 0.4% on your money in a month. So it's not really worth it, I don't think. I mean, if you want to be really safe, you would have to go higher delta, but it is a safer play to do it with the stocks in the futures. I'll definitely agree with that. There are pluses and minuses to both of this, but it's just not worth the return. So now let's look at a 0.1 delta on an MES. So we'll go the same 30 days out, same 0.1 delta. Delete that other one. You know, it's a strike 362, pretty much the same. It's within like a few dollars. You could take in about 1325 in premium, but there is a 5 multiplier when you look at the MES. Okay. So I'm going to multiply the 1325 by 5, and you can make about 66.25 in your credit minus the commission. So 64 bucks. It's a little less than SPY, is about half, right? Because I think SPY is giving about $110 or so.
Right.
But the key part is look at the buying power effect. It is only going to use up $562 to make the $64. Instead of $36,000, it's 560 bucks.
Now, why did you multiply times 5? Is that because you bought 5 of the
That's just
MES?
that's just how the futures work for the MES futures. If you have one
Okay.
contract, the premiums are a 5 multiplier. So whatever the premium number is, multiply by 5, and that will be the credit. See the credit 66.25.
Okay.
If you want to get bigger and you have bigger account, you can do this with ES instead of MES. That's just a 50 multiplier instead of 5. So essentially move the 0 over.
So I guess this is a lot of new concept. I haven't got into the
It
futures.
is.
That's what one thing I was talking about. So I guess it's a lot of new concepts. I've got the ability, and I say Schwab is pretty good usually, you can actually call them
Yeah, their
and they're
customer
pretty
service is
darn
great.
good. They're pretty good at walking you through stuff. And I thought, I may call them too, but I'm
Right.
trying to just trying to get more into the futures. I'm trying to figure out why I would do it, but I see what you're saying.
So if you go to the futures channel in the trade alerts right here, you can just look at my screen if you want. Every Sunday evening, I've been doing very low delta, short puts only on the MES. So if you look at the last one that we did, it was 33 days out. We went to the 3,600 strike price and we took in 4 in premium. But remember, there's a 5 multiplier for it. So 4 times 5, you're making $20, right? The buying power was only $388 to make that trade.
Not bad. Now, is that your maximum loss or
It's
is that
not. That's a key
not?
point. So if this position starts to go against you, it uses what's called span margin. Essentially, the brokerage is going to be looking at the total risk of the contract and saying like if you might get a sign or if it might continue going against you. It's a pretty complicated like calculation how span margin works. And I don't even know 100% of how it does it. But what I've been looking at is the margin requirements based on a standard deviation away. So that's about a 0.15 delta or so. Ends up being a little bit lower than what extra cash I want to leave on the sideline. So if you notice on these, every single one of them, I'm leaving cash and I'm not trading with it. Because if it does go against you, you're going to have to use up more than that initial buying power. It's a lot like portfolio margin if you had a really large account for stocks. Okay.
How many of these do you usually trade at a time? Like if you're doing this one you're showing here, the 3,600 put,
Yeah.
how are you doing? How many of you do you normally do at a time?
So it depends on what your account size is. For most of these trades, if you take the buying power about 388, and then let's leave an extra 612 in cash, they'll end up being $1,000 per position that you're doing. And if you took the $20 that we're making in premium, divided by the $1,000, that's our buying power plus cash. You're making 2% on your money in 30 something, 33 days. And it's, I think, a very safe play because the delta is only 0.04. I mean, that's 2 standard deviations away, which is very unlikely to happen. There is max loss scenarios. If MES drops below 3,600, it's just like a stock where you sold a, put, cash secured put, and it keeps going
Right.
against you. You could still be down more and more. Theoretically, the max loss is really, really large, but that would be for SPY going to 0, which isn't going to happen. I mean, even with like nuclear war, that's still going to be something in SPY, right? But yeah, that is something to consider. So definitely leave cash on the side. Don't just be tempted like, ooh, it only cost me $388 to make 20 bucks. I'm gonna overload and do hundreds of these. You don't want to do that because the span margin could catch up against you. In general, for futures, you should leave at least 50% of your available buying power and just cash and don't trade it at all.
Okay. So this thing here is at 3,600. I think Spies right now is what, 39 something.
Yeah,
Um,
the MES will be a
so
little different, 39, 31.
if it drops down, I mean, when am I going to start really losing money at 3,600 and below or?
You would be using up more of your buying power if it gets close to 3,600. But at expiration, if it's below 3,600, theoretically, every point below it, you'd be losing money.
But
So
above it,
if it,
but is this like options above? So if it goes to
yes,
3605, I'm getting all my money.
exactly.
I don't lose a dime on expiration
Exactly.
date.
Yep. So you could treat it just like an option there. If you're willing to do that wheel strategy, where sometimes you want it to get assigned, you take the shares, but in this case, we're taking the contract, and then you'd sell covered calls against it. But you could do that with futures too.
So I get assigned contracts, not stock.
Exactly.
Okay.
In general, so you can look it up. If you buy a contract right now on MES, it uses up about $1,500 per one contract. I think you could get by with about $1,000 in the initial buying power plus cash, because in most cases, it's gonna have to drop a really significant amount. If you want to be really safe, leave 1,500 per trade. But I think you could probably get by with 1,000 per contract. Um,
Which one are you doing better at, futures or options?
futures. I'm doing better
Futures,
on
are you?
this stuff. I'm staying
Yeah.
really low deltas, like 0.03 to 0.05, which is so far out of the money. I mean, MES did drop a bit the last few days. So the 0.03 delta right now, 30 days out, we're looking at 33, about 50. So we're not, right now we're at 39, 31. If it goes down to 33.50, it would have to drop 581 points, right? In a month, which is a big
You,
drop.
and you should have warning before you get there. I guess you can
Yeah.
close it out. Yeah.
Yeah, of course. 581 divided by the current 39.31, it would have to drop almost 15% in a month. So imagine SPY dropping 15% in a month. I mean, that happened during COVID, was pretty much the only month in the last like decade. So it's a very low chance this stuff is gonna happen. That doesn't mean it won't. It could. I mean, theoretically, it's like 3-4%. So yeah, I primarily do these futures, to be honest, because you can make a lot of returns in relatively safe strikes.
Okay. All right.
So yeah, it depends on what your account size is and what you're willing to do. I would definitely start slow and ease into it. Like try one contract and then notice what happens to the premium as it gets closer to expiration.
You let them go to expiration, or do you usually get out of them?
Most of these I let go to expiration. The reason why is I don't want to pay the double commissions. Commissions eat up a lot of the profits. So you just let them expire worthless. If it happens to decay, 50% in a week, I'll probably just close it at that point. But most cases, I just let it go. Did you see where the spreadsheet is of all the trades? It's under ebook strategy guide.
Book strategy guide.
Yeah, so go to Discord where it says ebook strategy
Okay.
under start here.
Yeah, I got an ebook strategy right now I'm looking at.
All right, open up the all strategy guys. There's a Google Doc there.
Yeah, I'm not seeing that.
It's under May 17th.
Okay, 'cause I'm in November here, so all the way back to May. Oh, okay, it's not that much here.
Yeah, I purposely didn't put much there.
March. April, May 17th, all strategy guides.
Yeah. Click on that Google Doc.
Got it.
Are you a decent reader? Like, do you like reading a bit? Or you like watching videos more?
I'd probably watch a video.
Okay. Any if you probably like videos, watch the YouTube videos that I make. This is a lot of just papers that I wrote on the different strategies. But definitely keep it in mind so you're aware of it. Now, on the very bottom of that file, so if you open up that Google document, on the very bottom, it should show, or pretty much near the very bottom, it shows the spreadsheet of trades. It's on page 4.
Spreadsheet of trades.
It's the last list.
Okay. Okay. Okay, I got it. I got it. Open it up.
Yeah, you could open it up. This was every single trade that I've been alerting since, I think, February.
Okay, well,
What you could do is look at the futures if you want, just to see how it's been working. On the very bottom, there's different tabs. If you want to look at the weekly MES tab, that one will show these weekly futures trades that I've been doing.
I just got a lot of cash secured puts here. I'm looking at it on my phone, so I may not be seeing everything like I should.
Yeah. If you want to look at the screen and the shared screen, you'll see it. So,
All right, go ahead.
so I was starting to do these in around May this year. Again, it's under weekly MES, and I've just been logging what I've been doing in this channel. So all these are in the spreadsheet. So I'll say the day, I usually go around 30 to 40 days out in the expirations. I'll say what MES is currently at, what the strike price is. These are always quite a bit lower than the current price.
Okay.
These are the premiums. I usually want to get at least 5 in premium because 5 will be $25 per contract. Occasionally I might sneak in a 4, but usually it's 5 to 7 or 8. Then the money collected, just multiply that by 5. That tells you how much premium you're getting per contract. Here I wrote down the approximate amount of cash you might need on the side with the buying power that you needed to start the trade. So a lot of cases, at least $1,000, sometimes a little more, 1,100 or so. Depends on VIX, depends on how far out of the money and other stuff. Deltas, I'm going 0.03 to 0.05 delta almost every time, really far away, because I want to be safe on these things.
Right.
Every one of them this year so far expired worthless. 100% so far. Fingers crossed it stays. This
Okay.
shows the percent return. It shows you how much we collected divided by the BP plus cash. So I'm looking for a consistent 2 to 4% a month on these things. And
Okay.
you see, most of the time we're getting at least 2% on them, sometimes 3. But yeah, this has been working in a pretty tough market, and quite a few people have been getting hit on these bear markets. But this has been working
Yeah.
really well. This has still been working really well. And this has been my best
Okay.
trades of all of them for this year. And you can see,
You're doing this, it looks like maybe weekly or 10 days or whatever.
yeah, I usually post them every Sunday night. You can do them Sunday night or Monday morning or so.
Yeah.
There will be a pretty annoying, like there's very little volume on these. Like not many people sell these things. So you're usually gonna have to get the bid price. Don't expect to get the middle, like with ops, like stock options. Like if you saw 3 and 4.05, you'd probably get around maybe 3.5 or so in most cases, right? But here you probably will have to get around the 3. So just get used to that. Almost
Yeah.
I think every single one of these that I wrote was the bid price. You might get a little more sometimes, but expect to get near the bid price. And don't be mad about it because you're still getting good return anyway, right?
Yeah.
If you happen to get assigned on one, I would just let it get assigned. Then you would own one contract. And then at that point, I would just sell calls against it at the exact
Okay.
same strike that I got assigned at. So if I
We'll just
sold
reel it.
the 3,400 and I got assigned, every week I would just sell a 3,400 call, and that would pay a lot in premium. That's a whole nother separate strategy we could talk about later when you
The
get
wheel
a little bit
strategy.
used to this stuff. That's the covered
Yeah.
strangles, but I would wait on that. But anyway, look at like 1 week out, about 9 days. We're right now at 39.30. You could sell the 39.30 call option for $66 times 5 multiplier. You're looking at $300 in a week. off about $1,500, which is incredible. And that's a whole nother avenue, which we'll get to another time.
Yeah.
I would say focus on what we said before, focus on the short puts and sell those really low delta short puts. Any other general questions you got?
No, something I did yesterday, and I bought a spread, and I think it was on the SPX, as I recall. And so I came back, and I wanted to just put a limit, or really what I want to do is put a stop on there.
Yeah,
But now Schwab would only let me do a credit or a debit limit if I did the spread. And so I did the debit limit thinking that I think I bought it at like 35, 40 cents. And I did the spread at 75, thinking that, and as soon as I put it in there, boom,
right.
it sold and closed it out, and I was done. I thought, well,
Yeah.
shoot. How do I do a stop on that? I just want to do a stop loss on it.
Well, the bad news is right now, I'm pretty sure you can't. However, when Schwab fully integrates Thinkorswim, you will be able to. I've heard that same question from like 3 other members. They have Schwab, they can't do stops. And because of that, they don't like doing spreads. Sorry, I can't give a better answer to that.
But I mean, the only way I could do it would be do stops on each leg.
You could do it,
Yeah,
you
I
could
could,
do a box spread where you buy them back at the same price, but that's a little inconvenient. I wouldn't even do it that way. Yeah, there's not really a good answer to that. I would say make it like set an alert price. And if it gets within a few percent or whatever you're comfortable with, like if it touches really close to that strike price of your short, then just get out of it manually, just do market order. In most cases,
well, I'll be honest with you on the shorts, I've had luck closing out the short and leaving the long in play. And then
yeah,
actually many times the long will actually make more money
yeah, it's like a
and I
lotto
still come
ticket.
out with profit. So I've had luck with that.
That's good. Yeah, that's a good way to do it. It's almost like a lotto ticket where if you know you already profited from getting rid of the short and it paid for your long, you could see if there's a dramatic move in the market. And sometimes those longs can pay a lot. This is an interesting way to
Yeah,
do
I
it.
actually
It's like a
probably
free
take a
trade.
slight, I'm taking a slight loss on the short because the price, to say the price starts dropping, I take a
Yeah,
slight loss on the short. But then what happens? I've left the long in play, and the price has kept dropping on times
right,
and approaching my long, and then then I've got actually more money than I would have made had I just let the thing expire. But
right.
yeah, I've done that and it's been done okay.
It sounds like do you have a large amount of cash on the side in a lot of your trades? Because not many people could do what you just did.
Yeah, I do.
Yeah, so that's fine. I know some people do it that way, and you can keep doing it. There's nothing wrong with that. If it's a certain stock that you wouldn't mind owning, what you could also consider is you sell your bought, like say bought put for a good profit, but you leave your short and then also get assigned. I gotta do a quick call. My wife, she's a nurse, so I gotta get going, but um and I'll talk to you soon, okay?
Okay. All right.
All right, thanks a lot, and I'll talk to you later, okay? Hey, babe.
Hey, honey.
I'm getting